Okay, so our next question comes from Calvin Henderson. You may turn your mic on or turn your camera on and ask your question.
Hey, Travis. Hey, Sarah. Is my audio coming through okay?
Yep.
Yep.
Great. So I really enjoyed your presentation so far. I want to take a quick second to congratulate Travis on putting together such a successful event. You've done great. My question for Sarah pertains to passive investing. The consensus right now seems to be that going forward, there's going to be an increased level of capital allocated to passive index strategies, factor strategies like smart beta through ETFs. And from my standpoint, that will likely create a large level of market inefficiencies. I think there's something paradoxical if all fund managers treat the market as if it was efficient and invest in that way. There's going to be a neglect of non-index constituent securities, and the value of index constituents will likely be inflated above anything that approximates intrinsic value. So I wanted your thoughts on that.
Yeah, no, I agree that I think the greater volatility that we're seeing in markets over the last 12 months, let's say, is probably a big function of the amount of money that's following ETFs now, because as prices move and as markets move, those ETFs have to play catch up. And so they're basically just piling on in the same direction of the trade that's already going because they're trying to match the index. So I think more ETF and passive investing is going to lead to more volatility in going forward. We do use ETFs within our portfolios for some segments of the market. For example, large cap US equities is the hardest market in the world to manage money in. It's the hardest market in the world to generate alpha in. And so in some cases, it might make sense to use a passive ETF for your large cap US equity exposure, and then layer that on with some active management in other areas of the US equity market, because we think you can still generate alpha in small and large cap US equities, in growth and value equities versus just plain vanilla large cap. And so we do use ETFs as a tool as part of our asset allocation. As you know, you may not know, but we have a partnership with BlackRock in Canada. And so we're actually the largest ETF provider in Canada and growing. And so we certainly see a place for it, but I think it's about, it's not about whether our funds better than ETFs. It's about how and when you use an ETF as part of a multi-asset solution. So there's a time and there's a place. And so you just have to make sure that you're making smart decisions around when to use it. I don't think it's a matter of, I should sell all my mutual funds and put all my money into passive. So I think it should be a mixture. We actually do because we get this question a lot, we actually have some work done that compares our net of fees performance of all of the mutual funds relative to the equivalent ETF. And 80% of our mutual funds on a net of fees basis are beating the equivalent ETF. And so we still think that there's money to be made in active management. So we don't recommend a purely passive approach, but as I said, ETFs are a tool that we use when we're managing the asset mix.
That's a great answer. Thanks.
Thank you.